Now, the topic I've been tasked with today is definitely high up there on the potential list of your favourite topics, repairs and maintenance for investors. And yes, I know what you're thinking. Great, here comes another one of Phil's fascinating diatribes about how you should be spending your hard-earned money on fixing things that should have been built to last a lifetime in the first place. But don't worry, I'm here to help you navigate the murky waters of repairs and maintenance without you going broke or losing your mind. Now, essentially maintenance is the work that goes into preventing something from needing to be repaired, like attending to some paintwork in the hallway or the living area, re-oiling that back deck. Now, whilst repair is classed as something that prevents the need to replace an entire asset, like replacing the front section of your fence that was damaged during the last storm. Now, the good news is that work such as these are more often than not deemed maintenance and repairs, and they're 100% tax deductible in the year that they are made. But there are 4 classifications from the ATO's perspective that you need to be across. As to what you might think a repair might just actually be is sometimes considered a capital improvement, and different rules about what you can claim or can't claim may apply, which of course can impact your financial situation and needs to be considered when making the decision. Now, they being this: repair, maintenance, initial repair, and of course, capital improvement. Now, it can be frustrating, time-consuming, and difficult to navigate this, as there's a lot of information out there. So to save yourself some time and energy, just reach out to the team and we can, at the very least, point you in the right direction. Now, if you're keener on learning some stuff about this for yourself, then go right ahead. I've included the links to some of the, available information in the comments section below. But to help you on your way, here we go. All right, repair. Now, according to the ATO, repairs are expenses that are incurred to restore something to its original condition, such as fixing or replacing broken or damaged parts. Now, these expenses are generally deductible when they are incurred, so to keep a property in good working order or to restore it to its former condition after which that damage has occurred. However, the ATO considers improvements which can increase the value or lifespan of a property as separate from repairs and may therefore be treated differently for tax purposes. Some examples of repairs might be fixing a broken window, repairing a leaky roof, replacing a damaged fence, repairing plumbing like a leaky tap, or electrical systems like a broken ceiling fan, or fixing a damaged wall or door. Now, remember, it's necessary to restore the property to its original condition rather than improve or upgrade it. Like if you're replacing damaged carpet with a higher quality carpet, it might just be considered to be an improvement and therefore not a repair, which means it may not be fully deductible. Now, maintenance is defined as any work that you carried out at your rental property to prevent damage or resolve some existing sort of deterioration. As I mentioned earlier, things like repainting outside or re-oiling the deck, repointing or recapping the tiled roof, etc. Effectively, maintenance refers to the expenses incurred by you as an investor in order to keep the property in good working condition, which allows it to prevent damage or fix some minor wear and tear. Now, some examples might include cleaning the gutters, servicing the air conditioning units, replacing light bulbs, or attending to smoke alarms and smoke detectors, which is mandatory in this state of Queensland. So, what's an initial repair, I hear you ask? Good question. While a repair is, I mentioned earlier, about restoring an item, an initial repair is to fix damage that was pre-existing when you purchased the property. Now, whether this was known to you or not doesn't really matter. It's important to note that initial repairs are considered to be of a capital nature, so check with your accountant and your quantity surveyor regarding the applicable deductions or depreciation benefits. The ATO considers a capital improvement to be a significant renovation or alteration that improves the overall value or quality of a property beyond its original condition. Now, examples of a capital improvement may include adding a new room, renovating a kitchen or bathroom, adding a swimming pool. Now, these improvements are not considered repairs, and it makes absolute sense that they're not, but they're rather capital expenses, and they're generally not deductible at all in the year that they were incurred. Instead, the cost of a capital improvement is added to your property's capital or cost base and may be used to reduce your capital gains tax liability when the property is sold. Now, this is because the capital gains, or rather the cost base of the property, is used to determine that capital gain or loss when it's sold, and any capital improvement along the way or expense can be included in this calculation to reduce that liability down. Again, it's important to keep records of all your capital improvement expenses, including invoices and receipts, to accurately calculate the cost base of your property. Now, if your situation is complicated, and undoubtedly it is, we always recommend that you speak with a quantity surveyor, and we can put you in touch with some of the great ones. Just let us know. Chat to your accountant, financial planner, and of course your agent, because if they're unaware of what's going on, they're unaware of what the changes and the ramifications could be, you could be leaving thousands of dollars in tax deductibilities, I guess, or deductions rather, on the table, and that's not okay. If you've got any further questions relating to this matter, simply reach out to me below. Just send me a direct message or put a section in the comments. If you'd like a copy of all of the source material that we use for this particular, I guess, diatribe, if you will, then reach out as well, and I'll happily send that through to you.